But in a single instant, one phone call turned his life completely upside down. "You need to get home now," his neighbor said frantically. "There's a dumpster in your yard, a padlock on your door, and a bunch of guys are ransacking your house." Completely panicked, Jeff dropped everything and raced back home. When he finally arrived, most of his family's possessions were either in a heap in the front yard or tossed inside the dumpster. Without any warning or notice, the bank had foreclosed on his house and sold it at auction just a few days earlier. And in a single afternoon, the life he'd worked so hard to build for his wife and 3 daughters was gone. It's a story we've heard all too often following the 2008 housing crisis. And despite what you're hearing from the mainstream media about this so-called economic recovery, it's a story we're going to hear again and again and again in the coming years. Have some people benefited from this record-long bull market? Absolutely. The richest Americans, who own most of the financial assets, have seen their wealth skyrocket. But for hundreds of millions of Americans who don't belong to that 1%, who were so completely devastated from the last crisis that they were unable or unwilling to participate in the recovery, things haven't gotten better. In fact, for many, things have actually gotten worse. See all that blue? No, it's not who voted for Hillary. Those are the prosperous parts of America where there's been strong economic growth, new jobs, rising home values, and higher pay over the past 2 decades. And no surprise, most of that prosperity is concentrated in the fast-growing western cities and tech hubs like San Francisco, Seattle, and Austin, Texas. But see all that orange and red? That's the America this recovery left behind. The older industrial cities that were once the engine of our economy, where today residents are more likely to die sooner, have more frequent health problems, flat or decreasing home values, and they earn less money with fewer job opportunities, where more than 38 million American households can't afford their housing, an increase of 146% over the past 16 years, where nearly 7 million homeowners are either completely underwater on their mortgage or barely above break-even, where 1 in 5 households are currently dead broke or in debt, and possibly the scariest statistic of them all, where nearly half of all Americans say they don't have enough money to cover a $400 emergency expense, which means even a tiny bump in the road, like an unexpected medical expense, the loss of a job or decrease in pay, a slight increase in the everyday cost of living, and millions of Americans could find themselves in the same situation as Jeff B., just one phone call away from experiencing the embarrassment and shame of losing their homes. So forget all the fake news you're hearing about the real estate market being safe again because of the shortage of inventory and record home starts. Forget about the record highs in the stock market, and forget about all the promises the White House and Congress have made. Because here's the truth about America none of the corrupt politicians, greedy bankers, or the idiot experts on the TV will ever tell you. The 2008 housing crisis is far from over. In fact, the real carnage is only just beginning. And we're already starting to see the cracks deepening in this fake housing recovery all across America as a silent foreclosure crisis continues to gain momentum. In August 2017, 5 states and Washington, D.C. saw significant year-over-year increases in foreclosure filings. Mississippi is up 9%, Vermont 12%, Louisiana up 59%. Washington, D.C. is up 67%, Wyoming up 79%, and Alaska tops them all at 100%. Nearly a quarter of the nation's largest metro areas are seeing rising foreclosures, including some of the hottest housing markets in the country like Denver, Austin, Dallas, Nashville, and Columbus, Ohio. Even New York City is seeing foreclosure auctions explode to levels we haven't witnessed since 2009. And if it's getting this bad in the best markets in America, it has the potential to be much, much worse everywhere else. Which is why today is a critical moment for you, your family, and your future way of life. Because according to my research, in 2018, your home's value could start to drop by 50% or more. This warning isn't an easy one for most people to hear, and I take no pleasure in telling you your home value could collapse and your retirement could be ruined over the next several years. But this isn't the first time I've made a controversial prediction like this and have been right. In April 2005, almost a year before the beginning of the housing market crash, I told my readers, the most important insight here is that home prices have gotten way ahead of inflation and quality trends, far more than any time in the last century. So this is not just a bubble, it is the greatest bubble we have ever seen in housing prices. AC, who's been following my work since the 90s, commented on Amazon.com saying, in 2002, when I was looking at houses to buy, I decided to stay away from real estate because his charts show a bad market years ahead. And he was right. I knew from his book I had maybe 5 years to own the house and sell, and decided rather just to stay out of the housing market because timing the peak would not be easy. That saved me $200,000 based on the value of homes around here. Ben, who thanks to my research, was able to get out of the stock market before it came crashing down in 2008, said, I've been following the work of Mr. Dent for many years, and I credit him with getting me out of the stock market before the 2008 crash. In fact, many financial professionals have used my research to help guide their clients' investment decisions over the past 3 decades. Like Carol S., who also commented on Amazon, wrote in, this is the calm before the storm. Harry Dent was referring to the real estate market in September 2005 as he addressed the network advisors at a conference in Tampa. His research suggested that we were in the greatest housing bubble that we have ever experienced, which was about to rapidly deflate. Dent's insight, research, and practical forecasting methods are a tremendous advantage in providing information to our clients about the changing economic environment that we are facing and the importance of demographic trends on our lives. What I'm about to reveal to you today is something you'll never see on TV. And you can either choose to ignore this important message and the ironclad evidence I'm about to reveal regarding this upcoming crisis and risk a catastrophic blow to your wealth you'll likely never recover from. Or you can take this seriously and have the once-in-a-lifetime opportunity to protect yourself and your loved ones from the devastating crisis at our doorstep.
Do you remember the last 2008 housing bubble collapse? Well, the one that's about to take place could be even greater. The question is, how do you take advantage of this housing bubble crash before it takes advantage of you? The answer is very simple. Visit marketcrash.money, hit right here, how to profit. If you're in the real estate or if you're in the stock market, there are simple option strategies that you can utilize instead of just sitting and waiting for the prices to come down. There's a specific simple strategy you can utilize to actually profit. Simply click this How to Profit button. I will share with you specifically what I did to turn $12,000 to $466,000. See, most of the people just know how to make a profit from rising prices. What if you found out a simple formula on how you can profit from falling prices? Well, wouldn't that be nice? To actually not to have to sit and wait till the prices came down, to actually be able to put your capital to work and buy something at a lesser price? What if you could do both? What if you could profit from falling prices, make a fortune on that, then turn around and buy this stuff at the best possible level later when the opportunity presents itself? What if you could do both? See, you don't have to settle, and that's what 99% of the people don't understand. Some of the greatest fortunes throughout the history were created by people who made money on equities or housing bubbles dropping, and they profited by utilizing a very simple formula, which I am more than happy to share with you. Simply visit marketcrash.money and hit right here, how to profit. In other words, the crash is coming. The bubble is going to burst. What are you going to do? And the time to do it and the time to take action is now.
So if you or someone you know are one of the millions of Americans who are counting on selling their home to afford retirement, I urge you to heed this warning. Sell your house now before it's too late. Even if you don't currently own a home, or you do, but have no intentions of ever selling your house and don't care if it drops in value, or you have some other unique situation that makes you believe this housing crisis can't possibly hurt you, keep reading, because the domino effects caused by this upcoming crash most certainly can have a dramatic impact on your wealth if you aren't prepared. But before I go any further, let me introduce myself. My name is Harry Dent. I'm a Harvard MBA graduate and a new venture consultant and investor who, with the help of the research foundation I created, discovered a powerful link between the science of demographics and how they directly affect what the markets will do next. Stocks, real estate, everything. You'll rarely hear any economist, academic, or politician talk about this, and that's because they don't understand this one simple truth. Spending, not government policies, is what primarily drives every economy. You see, as a group, people do predictable things as they age. Just ask any life insurance actuary who knows when the average person is going to die down to the decimal point. The average person buys their first car at age 25, gets married at 26, has their first kid at 28, and then they buy their first house at 31. And when you know what types of things people will buy and when they'll buy them in their lifetime, it's almost like having a crystal ball that allows you to peer into the future of any developed economy. This demographic research has helped me consistently make accurate economic forecasts, sometimes decades before they happen, like the crash of Japan in the 1990s, and simultaneously the roaring 90s bull market in the US and Europe and the rest of the world. The dot-com crash of the early 2000s, the real estate bubble a few years after that, starting in 2006, the 2007 to 2009 financial meltdown, gold's recent slump, along with the dollar's rally, and oil's shocking fall in 2008. And in just a few moments, I'll reveal the science behind my research and why it works so well. But right now, the important thing you need to know is this. It's predicting another massive real estate crash. And in case you're wondering why you're not hearing this warning from other economists, there's a simple reason. I know something most experts don't. You see, economic bubbles are mass delusion, where investors wrongly assume that prices move in only one direction. Of course, that's up. Nowhere is this delusion clearer than real estate. Almost without exception, the biggest economic crises in history have been led by massive speculation in real estate thanks to cheap credit from banks, like Japan in the 1980s. Between 1980 and 1985, the US dollar rose 50% against the Japanese yen, and American businesses weren't happy about the flood of cheap imports from the land of the rising sun. So, the 1985 Plaza Accord was passed to devalue the dollar and make US exports more competitive, and Japan started to go into a recession. But the Japanese bureaucrats had a tried and tested formula that got Japan out of any rut experienced in the past half century. Just pump cheap credit into the economy. Interest rates plummeted from around late 1985 to the first half of 1987. And once the Bank of Japan flooded the economy with easy money, it had to go somewhere, and it went into domestic stocks and real estate. That's how you create a bubble. From 1985 to 1989, Japan's Nikkei stock index tripled to 39,000 and accounted for more than a third of the world's total market cap. Real estate prices in Tokyo's prime neighborhood were suddenly worth 350 times more than comparable land in Manhattan, New York. The land underneath the Imperial Palace was rumored to be worth more than the entire state of California. Almost everyone thought Japan was going to surpass the United States and become the largest economy in the world. Except for me, that is. Thanks to my demographic research and my extensive study on why economic bubbles boom and bust, I knew Japan was sitting on a ticking time bomb. And they were at the top of their baby boom generation spending cycle. We were just getting going. They simply didn't have the population to continue to drive up real estate prices. I knew for a fact that Japan was in a bubble, and I was publicly ridiculed by everyone in the mainstream media for predicting their collapse. And that's exactly what I did predict in my very first book, Our Power to Predict, in 1989. And then it all came crashing down. It's been almost 30 years since the crash, and Japan can barely manage to prop up its deflating economy despite years and years of zero interest rates, repeated quantitative easing, good old money printing, and constant currency devaluations. People around the world thought a crisis like Japan's couldn't possibly happen again. But then in 2006, it did.
Are you a stock or an options trader that is absolutely fed up with ordinary results? Are you ready for your breakthrough? I know how you feel because everywhere I turned throughout my trading journey, everywhere I looked how to produce phenomenal results within a short amount of time, everybody was telling me, no, it's not possible. It's not real. It cannot be done. So I got fed up. I discovered the 5 core fundamentals that helped me turn $12,000 into $466,814 in less than 7 hours trading options from my laptop. I know this probably sounds unrealistic to some of you, but the truth is I did it. I will share with you in this interactive video course specifically everything, every single detail, every action, every stock that was traded. As a matter of fact, I'm sending you my brokerage statement listing every trade that was taken that day. I realized one thing when I accomplished this is that I wish I had someone years ago when I was starting my trading journey and throughout my trading career that has shared these 5 core fundamental principles with me, because that would have saved me a lot of headache. That would literally save me a lot of heartaches, a lot of lost and suffered relationships. That would have saved me a lot of losses. That would have saved me a lot of time from discovering all these answers on my own. This is what you will be able to learn from this interactive video course. Secret number 1, discover the best stocks for trading options. Secret number 2, discover the top 3 best chart patterns for huge returns. Do you struggle with the decision, should I sell now or should I wait? And sometimes when you make a decision, do you see your profits vanish, or do you drown in the regret when you get out of the position just because you see how much money you left on the table? Don't let this ever happen to you again. Secret number 3, discover the key to locking the gains. Secret number 4, knowing the trend will make you money. Discovering the TRO versus the trend will make you a fortune. Secret number 5, the holy grail of all secrets in trading. Timing. Can you only imagine if you knew specifically on which days to trade and on which days to go fishing and enjoy life? And the secret number 6, the truth behind of how to trade the news that will take all the guesswork out of the equation and will help you trade with great confidence and extremely high probability. Today is your day. Are you ready for your breakthrough? It is very simple. Go to marketcrash.money/500K. Click this big orange button and say, yes, set me free. Take action now.
As I mentioned earlier, starting in April 2005, and then again in September 2005, I warned our subscribers and readers of the pending real estate crash. But I first predicted it would happen all the way back in 1993 when I published my second book, The Great Boom Ahead, 12 years before the crash began. Of course, I was again ridiculed by the mainstream media, politicians, and experts who were all too willing to ignore my warning. But my research has proven time and time again that demographics are destiny. And just like Japan in the 1980s, the U.S. was about to enter a decade-long real estate boom, followed by a major recession and crash. Then in 2000, the dot-com crash tanked the U.S. economy. And just like Japan did in 1985, the Federal Reserve used its favorite trick to try to right the ship, pump cheap credit into the economy. Interest rates fell from their December 2000 high of 6% all the way down to 0.75% in December of 2002. But most people had lost faith in the stock market after the dot-com bust. So where did all that free money go? Into real estate. It was like watching Japan in the 1980s all over again, except this time it was bigger, way bigger. Americans went hog wild and started buying property as fast as they could and created what was arguably the largest bubble in history. It was mass delusion at its ultimate height. And then, well, you know how this story ends. It was the beginning of the worst economic crisis since the Great Depression. According to the Government Accountability Office, the Great Financial Crisis cost the U.S. economy more than $22 trillion. So what did our central bankers decide to do to kickstart the economy? That's right, pump even more cheap credit into the economy. And now, here we are again, more than 9 years later, desperate to believe this recovery is real. The stock market can continue to climb to record highs, and we can all retire rich thanks to the magic of real estate. But you must see through this fantasy if you want to have any hope of affording retirement. Because right now, we're right in the middle of another massive real estate bubble. And when it pops, It'll destroy the retirement dreams of millions of Americans in the process. How do I know this? Because all bubbles end when there are more sellers than buyers. And I'll come back to this point in just a minute. As I mentioned before, economies are driven by people spending money at predictable times in their life cycle, not government policies or central bankers primarily. It was thanks to this insight that I was able to develop a breakthrough forecasting technique I call the spending wave. Remember that crystal ball I mentioned earlier? Here's what it looks like. As individuals, our spending habits are quite different, but as a group, they're shockingly similar. For example, we knew for the baby boom generation that they'd buy their first homes at the average age of 31. Then as they had kids and their families grew, they'd move into bigger homes, trade-up homes, at the average age of 41. At around the age of 46, right as they're getting ready to ship their children off to college, they would hit their peak levels of spending, which is exactly the reason I was able to predict the 2006 housing crisis and the stock market crash after 2007 with uncanny accuracy all the way back in 1993. All I had to do was add 46 years to the births we had in America, which I adjust for immigration. And when I did, I got a chart that looked like this, a stunning correlation for nearly 50 years ahead with the Dow Jones Industrial Average adjusted for inflation. Now I'll admit, there's no possible way I could have anticipated almost a decade of zero and negative interest rates, and how that'd keep this fantasy land of a market inflated for even longer. But there's simply no escaping America's demographic destiny. The oldest members of the baby boom generation turned 70 in 2016. That means the largest generational cohort in America is looking to sell their homes and cash out for retirement. Now the boomers have been holding off doing this for as long as they could in an attempt to recover from the last financial crisis. But that's about to change. Remember how I said all bubbles end when there are more sellers than buyers? As the boomers start rushing for the exit all at once, that's exactly what we're going to see. And despite the fake news narrative about how strong the real estate market is because of the lack of supply, there are three major problems they aren't telling you about that create massive risk for American homeowners. Right now, millennials are the largest cohort of home buyers in America, not baby boomers. And even though they're waiting longer to get married, start a family, and buy a home, and they're more likely to skip buying a starter home and opt for a larger property, they have almost zero interest in the massive McMansions that cost a fortune to maintain, and that typically lack the desirable open floor plans and high amenities millennials want, and are usually located in hellish suburbia far away from the hip neighborhoods and fun activities, which is exactly why the baby boomers want to sell them. So what's happening? Boomers and millennials are competing for the same limited supply of desirable housing inventory. There isn't a housing shortage, there's a shortage of affordable housing in desirable areas. Which brings us to problem number 2. Housing is more unaffordable than ever. Even though home prices are, on an inflation-adjusted basis, lower than the peak of the last crisis, and even though millennials say they want to buy bigger homes, the reality is homes have never been more unaffordable than they are right now. And despite all the cheerleading you see coming from mainstream media about the record low unemployment levels and how healthy the American economy is, nothing could be further from the truth. Because guess who's been getting all those jobs? It's not the millennials or Gen Xers, it's boomers. Because baby boomers have delayed moving into retirement, they've also stayed in the workforce much longer than normal. And they're often willing to take lower pay in exchange for a steady income to help them with the monthly bills and to continue to save for retirement. Which means not only are boomers competing with young home buyers for the same inventory, but they're also competing for the same jobs. So who's going to buy all those unaffordable homes at the prices baby boomers expect to sell them for? Not the millennials, who as a cohort earn less money than baby boomers did at their age, have lower employment rates, and are saddled by huge amounts of student loan debt, nor for that matter, any of the 38 million Americans who, as of today, can't afford to live in their current homes, nor the 7 million homeowners who are either completely underwater on their mortgage or barely above break even, nor the 1 in 5 American households that are currently flat broke or in debt. Because despite the lies you're hearing about this miraculous recovery we're currently experiencing, tens of millions of American households across the country earn less income, have less wealth, and carry far more debt than they did in the 2000s. Meanwhile, banks are still stringent on mortgages, even after one of the most liberal lending periods in banking history. So even if every single millennial could qualify for a mortgage to buy these unaffordable houses, even if every single one of them was ready and willing to buy a house today, and even if the GOP tax plan, rising interest rates, America's $21 trillion and growing national debt, the $210 trillion in unfunded liabilities, or the Fed's unwinding of its massive balance sheet have zero negative impact on the economy, there's still one major problem: the harsh reality about living. One day you're going to die. And in America, that statistically happens between age 79 and 80. And as more and more American homeowners start to die off, their empty homes will come on the market. Which is why, when we make residential real estate forecasts here at Dent Research, we not only factor in the number of peak buyers, we also subtract the number of dyers to accurately predict total supply and demand. I call it net housing demand. And when you add in this missing piece of the real estate market puzzle, there's only one rational conclusion you can come to. Over the coming years and decades, there's going to be increasing supply versus demand. This, by definition, will drive prices down. And when the market starts forcing home prices down, no amount of cheap credit from the Federal Reserve will ever entice dead people to buy new homes and reflate the real estate market. I call this phenomenon the demographic cliff. And it's exactly the reason why Japan's real estate market has never bounced back from its 1991 peak. There's simply not enough people alive in their country to buy all the available houses. In America, along with several other wealthy, developed countries around the world, are all headed for the same fate. I've said it before, and I'll say it again. There's no escaping our demographic destiny. And just like Japan in 1991, and the U.S. in 2006, once the real estate bubble pops, it's going to take everything down with it. That's why I've been working these past few months on a new ebook to help regular folks like you prepare for this inevitable upcoming crisis and grow your wealth in the process.
Do you remember the last 2008 housing bubble collapse? Well, the one that's about to take place could be even greater. The question is, how do you take advantage of this housing bubble crash before it takes advantage of you? The answer is very simple. Visit marketcrash.money, hit right here, how to profit. If you're in the real estate or if you're in the stock market, there are simple option strategies that you can utilize instead of just sitting and waiting for the prices to come down. There's a specific simple strategy you can utilize to actually profit. Simply click this how to profit button. I will share with you specifically what I did to turn 12,000 to 466,000. In other words, the crash is coming. The bubble is going to burst. What are you going to do? And the time to do it and the time to take action is now. So don't let. So how do you take advantage of the next stock market and housing bubble crash before it takes advantage of you? So how do you take advantage of the next market crash? Not just barely making out of it, but how do you actually prosper in such environments? Because if you study some of the most affluent people in the world, they made their fortunes when things collapsed. It presents great opportunity if you want to know how to profit through trading options. If you'd like to know how to profit utilizing trading options strategies, take action now. Hit right here, how to profit, and get the answers you've been looking for. See, most of the people just know how to make a profit from rising prices. What if you found out a simple formula on how you can profit from falling prices? Well, wouldn't that be nice to actually not to have to sit and wait till the prices came down, to actually be able to put your capital to work and buy something at a lesser price? What if you could do both? What if you could profit from falling prices, make a fortune on that, then turn around and buy the stuff at the best possible level later when the opportunity presents itself? What if you could do both? See, you don't have to settle, and that's what 99% of the people don't understand. Some of the greatest fortunes throughout the history were created by people who made money on equities or housing bubbles dropping, and they profited by utilizing a very simple formula, which I am more than happy to share with you. Simply visit marketcrash.money and hit right here, how to profit.